Hey everybody, hope you're all doing well. In today's video, we're going to go over this 10.62R trade that I shared amongst the community. We're going to break down my reasoning behind it, how it was executed, and what was required in order to hold it to its full potential. So as you can see, we're on the 4-hour time frame. I mentioned recently that I'm going to be only focusing on the 4-hour and the 15-minute time frames for the foreseeable future. I want to perfect my higher time frame strategy. I'm no longer using the 1 minute, 5 minute, etc. Just because of my lifestyle at the moment and what I want to adapt to. So the overall analysis on this pair was based on the 4-hour time frame. Clearly bearish order flow. We're in a very clear downtrend. Not much to explain there. Now, in terms of POIs, we have two 4-hour POIs, two major ones right here. The reason those are highlighted is obviously they broke structure very impulsively. So we had a structural break here, very impulsive break to the downside, creating imbalance as well. And the same thing occurred right around here. I'm not going to bother marking it because it's just going to get too cluttered. It's hard to see the lows and the highs on the 4-hour time frame sometimes. But regardless, that was a strong POI, created a very impulsive candle that broke structure to the downside. And so this area here was my first point of interest. I had this here just marked out anyways in case price broke through this 4-hour level and reached here instead. But let me go back to the Discord community because that's where I initially posted the analysis. So here it is. At that current time, price was right around here. Let me see if I can use the replay tool to bring it back to that exact candle. I believe it was this one here. So let's see. Yeah, that looks about right. I think that's the one. So yeah, price was right about here when I initially was analyzing this pair. So given the fact that we've already established the trend is to the downside, I'm looking for bearish continuation, obviously, but only after we react to one of these zones, right? So in the meantime, instead of just sitting and waiting, what we can do is take advantage of the fact that we have a good understanding that price is going to reach at least this zone first, right? So with that being said, we can then drop down to the 15-minute time frame and take bullish trades until we reach this 4-hour zone. So that's exactly what I did. So going to the 15-minute time frame analysis, this is what I was looking at. So I'm not going to bother messing around with the replay tool too much because it's going to take a long time for me to find this exact point in price. So we'll just use this image as a reference instead. So I used the SMC indicator by Sonar Lab to locate my points of interest on the 15-minute time frame. And I set the indicator to buys only. So let me show you what that looks like briefly. So if we turn on the indicator, there's a setting right at the top that says position type. You can set it to both, or you can set it to buys, you can set it to sells. So I set it to buys just so it didn't show me any bearish order blocks, any supply zones. It only showed me the demand zones. So these were the two that popped up immediately. Of course, one was the extreme, which was way down here, and then we had a higher up one that I labeled as possible inducement because it wasn't responsible for breaking any structure. The indicator labeled a minor break of structure right here because price broke through that level. But overall, I didn't create a new swing high. It would have had to surpass this level here to create a new swing high. So with that being said, this isn't a very strong level to choose from. So I disregarded it, labeled it as inducement, and I was focused on this zone down here, especially because we had relative equal lows here, which represents a lot of liquidity. So this was the position I set. I shared this to the Discord community for everyone to see. I just set a buy limit order here. I believe the stop loss was 12.5 pips, which, you know, whoever knows me here, you know that that's a little more than I'm used to. But like I said, I'm trying to adapt to a higher time frame strategy here. So I'm willing to go, 10 to 15 pips or so. Yeah, so in this case, I targeted just the high of the demand zone rather than doing the 50%. I figured this would be more of a swing trade anyways, so I just wasn't too concerned with getting like the best risk reward possible. This was over 10R altogether, so I was more than okay with that. So I didn't want to be greedy and target the 50%. Although in hindsight, the drawdown was significant, as you can see here, once the trade was already progressing. I came actually pretty close, just a few pips away from my stop loss. Miraculously, I was able to remain in the trade, but I certainly was not happy with this entry, to be quite honest. So if I targeted the 50%, it would have looked a lot better. But regardless, my stop loss was placed at a point of invalidation. It was below the low of the demand zone that I was initially targeting. However, with EURUSD, as many of you are aware, it creates a lot of double bottoms, double tops. It's the most traded pair in the financial market altogether. So there is a lot of traps like that. Sometimes it'll just slightly purge liquidity from a low and then take off in the direction that you anticipated. So that's why when I'm trading EURUSD, I always try and extend my stop loss a little bit more just to create a little more room for movement. So with that being said, at this point in time, price was significantly into profit. I did not take any partials and I did not move my stop loss to break even simply because there was no area to do so. So at this point in time, yes, we broke structure, we broke these highs, price was impulsively moving upward. But if I moved my stop loss to break even, that would have been silly because we have a point of interest right here, this bullish engulfing candlestick pattern. That was the demand zone responsible for this impulsive break of structure, right? So given the theory of our strategy, price should retrace back to at least that point and then take off from there, right? So if I were to move my stop loss to break even, I'd be setting myself up for an early exit, which is not okay. So I just left it the way it is, full volume, original stop loss and everything. Now looking at the Discord community here, I didn't provide too many more updates because I didn't want to get like repetitive. Things were moving quite slowly because we had FOMC, some major news coming up. So things were moving sideways for quite some time. There was a scale-in opportunity. I know many of the community members here were frustrated by this. I was as well. I had this 15-minute demand zone set up here. As you can see, it was highlighted, that candle right there that we were just talking about, creating this huge break of structure to the upside. And then price created so much liquidity by moving sideways here that it looked like a no-brainer that this zone was going to be mitigated. However, as you can see, it wicked down and just missed the point of interest by like literally not even a pip, I believe it was. So that was frustrating. I had a scale-in order set for there too, and it was of course not activated, but it is what it is, you know, whatever. I was still holding the initial position. Now I want everybody to take a look at this and understand like the patience that's required to hold a trade like this, because it's not pretty, but I trusted the analysis, right? My initial analysis made so much sense to me that I trusted this ugly price action to eventually work in my favor, right? So although it was moving sideways for a huge amount of time, this impulsive movement right here kind of solidified my bias and gave me the confidence to hold it regardless of this ugly price action, right? So I didn't provide any more updates there. So let's go back to the charts. Let's go down to the 15-minute time frame. And I will open the object tree. Nope, that's not it. That's weird. Why is it not showing? Oh, because I'm still in replay mode. That's why. Okay. Right. So this was the whole position right here. Now, within the position, I had another scaling opportunity here. That was a quick loss because the FOMC news just spiked it and then traded up immediately. That was silly. I was looking at the order prior to the news event and I was like, maybe I should delete this. But then I was just like, you know what? It's a small position anyways. I risked only 0.5%, whereas this position I risked a full 1%. So yeah, I wasn't really concerned about it, to be honest. I took like a $400 loss or something. It wasn't a big deal to me. So yeah, I left the order there. I was aware it could be spiked out, and that's exactly what happened, but all good. Of course, the news worked in the favor of this trade, so it pushed momentum to the upside, which inevitably hit the take profit. Tapped into the 4-hour zone, which is exactly what I was looking for. And yeah, so it's pretty straightforward. The main purpose of this video is I just wanted to stress the amount of patience that's necessary for taking trades like this. So the whole trade took, let's see, a total of 2 days, 7 hours, and 45 minutes. So almost 3 days. It's hard to classify this as a swing trade, really. Like, that is a pretty quick outcome, but overall, I'm used to taking intraday trades. So this did require me to work on my patience a little bit, especially through the ugly price action that we're seeing here, all the sideways movement. But overall, I trusted the analysis because my 15-minute entry execution was anchored to 4-hour higher time frame analysis, right? And if we look at the 4-hour time frame now, it did exactly what was predicted in the beginning. We mitigated this 4-hour zone, and look at how beautifully we rejected it, and we're now trading away from it. So now that we've seen that rejection moving forward, we're now in line with now the 15-minute time frame is in line with the 4-hour time frame, right? We had this bearish downtrend here. This 4-hour zone was the first point of mitigation that I'd be looking for. So my point is, prior to this mitigation happening, we were able to take advantage of long positions because we knew that it was highly likely price was going to trade into this zone. Now that we have traded into this zone and clearly rejected this zone, we can now look for short positions on the 15-minute time frame. Okay, so it's just simple. We're going zone to zone, following the trend, or going counter trend, but it always has to be anchored to higher time frame analysis. So moving forward, on the 15-minute time frame, once again, I have this position set up here, and it was based on, let me just turn on the indicator again because it showed me the proper zone. So as you can see, we've rejected the 4-hour higher time frame supply zone, clearly traded away from it. We created a break of structure, another break of structure. I missed this one this morning. Let me show you guys what it looked like. So if I go back in replay mode, don't know why it's taking so long to load. Okay, well, it's okay, there we go. So yeah, I woke up a little late this morning. I was actually in bed when I saw this zone being printed. I just checked my charts quickly. I noticed this zone was printed by the indicator. Now, in hindsight, of course, I should have set up a position like this. But at the time, because I was still in bed, I wasn't at my charts, I didn't feel confident enough to do that. So I just made the risk reward a little more favorable by targeting the 50%. And what happened is we never reached the 50%. It was extremely close. It was tough to watch that happen. Just a couple pips away from the 50% where my order was set, and then price melted away. So that would have presented a really good opportunity. It would have been well into profit right now, but that's okay. So I currently have an order set for this zone, and that was this right here. So again, it's set for the 50%, but I'm okay with it at this point. That's fine. There's a big wick on this candle too, so I'd be more interested in it mitigating the body of the candle. So I have it set to the 50%. The target, I know on the 15-minute time frame, it doesn't seem like it makes sense, but if we pop back over to the 4-hour time frame, I'm actually just targeting the 4-hour low. So pretty straightforward. Gives me a good risk reward ratio of 9.7 R. So we'll see what happens there. But the point I'm getting at here is that we're now in line with the 4-hour time frame. So now I'm taking a short position, which is pro trend. Okay, so the 10.62 R position that I took moving up to the 4-hour zone, that was technically counter trend, but it was based on, you know, a good understanding of higher time frame analysis, market structure, and supply and demand. Okay, so it was actually pretty straightforward, and it's a good example of how you can utilize only 2 time frames here, the 4-hour and the 15-minute, and still make incredible returns. So I'm hoping to continue to do that on EURUSD here because the structure and the price action is very clear to me. So I'm hoping we can get a mitigation back to this point here, this supply zone. Hopefully it tags me in and then it takes off towards my take profit level. That would be fantastic. So I hope you guys enjoyed this video. Just a reminder, like, just be patient. Don't rush your trades. Don't feel the need to get into 1 million trades a day. You're just shooting yourself in the foot. So one reason I'm trying to focus on this strategy is because I realized I was taking too many trades and it was stressing me out. I wasn't able to focus on anything else in life. So I just want to get away from that. I'm going to be traveling a lot this year too, and I want to develop a more stress-free way of trading. And in turn, I know that I can forward that information to others as well and maybe help them in their own personal lives with their trading schedules. So I hope this video was well received, and yeah, I'll talk to you all soon.